Opendoor stock closed Tuesday's aftermarket down slightly, shedding around 6 cents, a quiet end to what's been a busy and important few days for the company. On the surface, it looks like just a small move. But beneath that calm, there's a lot happening that hints at how Opendoor's leadership is positioning the company, and maybe how smart money is preparing for what's next. Let's start with what we know. Kaz Nejatian, Opendoor CEO, announced that Morgan Brown is joining the company as Chief Growth Officer. And this isn't just another executive hire. Morgan Brown is one of the most respected names in the world of growth marketing and product-led scale. He's the co-author of Hacking Growth, a book that's often called the blueprint for companies that went from scrappy startups to category leaders. He's worked with global software giants, including Shopify and Meta, and he brings a data-driven, experiment-oriented mindset to building user adoption and revenue. So why does that matter for Opendoor right now? Because growth at scale, sustainable, measured, repeatable growth, is exactly what Opendoor needs at this stage. Under Kaz's leadership, the company has been rebuilding from the ground up, cutting inefficiencies, tightening operations, and shifting the focus toward AI-native execution. But to turn all of that operational excellence into results that the market can see, Opendoor needs to accelerate customer acquisition and trust. Morgan Brown is the person who can help them do that. Kaz's post announcing Brown's arrival included a telling phrase, "We're tilting the world in favor of homeowners." That's not just corporate optimism, it's a statement of mission. It suggests that Opendoor's leadership is thinking about home ownership as a right, not just a transaction, and they're assembling a team that can drive that transformation with speed and precision. Every hire lately has reflected that intent. It's not about filling seats. It's about building a leadership core of people who know how to scale fast and intelligently. And this new addition comes just as conversations around crypto and tokenization are heating up again. Over the weekend, Kaz responded to a user on X who suggested that Opendoor should allow home buying with Bitcoin or other cryptocurrencies. His reply was simple but powerful: "We will. Just need to prioritize it." That single sentence triggered a wave of speculation, which was only amplified when Robinhood CEO Vlad Tenev replied publicly saying, "Can help you with this." Kaz responded with, "Let's talk. DM's open." Now, on the surface, that could be read as casual banter between two tech CEOs. But the subtext is much more interesting. Robinhood is already at the center of the retail trading movement. It's one of the most widely used financial apps in the world. If even a small portion of that ecosystem intersects with Opendoor's marketplace, say, through tokenized property transactions or crypto-based settlement, it could represent a massive leap forward for liquidity in the housing market. Imagine being able to tokenize part of a property portfolio or use digital assets as collateral for a down payment, all while transacting through an Opendoor platform. It's a futuristic concept, but in this era of rapid fintech integration, it's not as far-fetched as it sounds. And the fact that Kaz and Vlad are talking openly about it, in front of millions of investors, signals that something deeper is brewing beneath the surface. This is exactly the kind of quiet strategic alignment that catches short sellers off guard. When shorts target a company, they're betting that the fundamentals are eroding and that leadership doesn't have a clear path to growth. But that's the opposite of what's happening at Opendoor. Kaz Nejatian is assembling one of the strongest executive benches in the company's history. Eric Wu is actively buying shares on the open market, and the company is rolling out a buyer-focused product that's already generating positive feedback in its first test markets in Texas. So while the stock price has been volatile, the fundamentals have been improving. And that's where this story becomes interesting. When price lags progress, it often creates setups for sharp reversals, especially in stocks with high short interest. Shorts tend to cover fast when the narrative starts turning bullish. That's not speculation. It's pattern recognition. If we look back over the past few weeks, we've seen Opendoor swing from around $7 to over $9, and back again. But every time the stock pulls back, there's been new information to reinforce confidence. Insider buying, AI product launches, or major hires like the one we saw today. And that's what long-term investors look for, consistent signals that leadership is executing the plan. Let's also remember that Kaz is still early in his tenure as CEO. It's been just over a month since he took the reins. In that time, he's already implemented a company-wide default to AI mandate, launched Opendoor Assistant to automate internal workflows, and rolled out a buyer-side product with features like a 7-day home test drive and a 100-day warranty. That's an incredible amount of tangible action in such a short period. Most CEOs spend their first 3 months just assessing the landscape. Kaz has spent his first 3 months shipping products, hiring world-class talent, and laying the foundation for a more agile company. And the market is noticing. Mainstream outlets like Motley Fool have started referring to Opendoor as a potential growth stock, not just a real estate or home flipping play. That shift in language matters. It reflects a broader recognition that this isn't just a cyclical housing story anymore, it's a tech-enabled platform story. When a company starts being talked about as a growth stock, it changes how institutions model it, how funds categorize it, and how investors perceive its future potential. Which brings us back to the shorts. A lot of traders shorted Opendoor in the single digits expecting another breakdown. But if the stock can stabilize in this range and continue showing operational wins, those positions become increasingly risky. Remember what we saw with the Jane Street disclosure. One of the largest quantitative trading firms in the world took a 5.9% stake, buying 44 million shares. That's not retail speculation. That's data-driven conviction from one of the most sophisticated players in global finance. So if you're short and you see that kind of firm buying in, along with insiders like Eric Wu accumulating shares and the CEO actively transforming the company, that's a tough setup to stay confident in. Especially if retail sentiment begins turning positive again, something we've been watching build since the Open Army community started rallying behind Kaz, Eric, and Keith Rabois. Speaking of Keith Rabois, his recent social media presence has been impossible to ignore. Photos with major political and business figures, including Donald Trump and Benjamin Netanyahu, sparked conversations across X. Some critics focused on the optics, but others saw it as a reminder of Keith's extensive network and influence. When you're connected at that level, doors open. Relationships like those can lead to new partnerships, visibility, and access to capital, all of which strengthen Opendoor's position as it scales. It's important to remember that Rabois has been part of some of Silicon Valley's most successful ventures, from PayPal to Square to Opendoor's founding itself. His return as chairman wasn't symbolic, it was strategic. He brings both credibility and connectivity, two things Opendoor can leverage as it transitions into this next phase of growth. So where does that leave us heading into tomorrow? On one hand, we have a stock that's cooled off slightly after a big Monday rally. On the other, we have a company that's executing, hiring elite talent, and planting the seeds for the next wave of disruption in real estate technology. That's not a bearish setup. That's consolidation before potential momentum. And when you factor in short positioning, investor sentiment, and the increasing alignment between Opendoor's internal vision and external partnerships, you start to see how the conditions are building for a possible breakout. It might not happen tomorrow, but when it does, it'll probably catch a lot of people by surprise. That's the nature of turnarounds. They don't happen in a straight line. They happen quietly, behind the scenes, as leadership makes the right moves and the market gradually realizes it underestimated the company. The small down days become irrelevant when the foundation underneath keeps getting stronger. Opendoor's transformation is still in its early stages, but everything we've seen lately points in the same direction. A company regaining confidence, a community rebuilding conviction, and an executive team that's not afraid to move fast and think big. Kaz Nejatian's leadership has already changed the tone. Morgan Brown's addition adds another layer of sophistication to that growth playbook. And the conversations happening around crypto, AI, and home ownership are expanding the horizon for what Opendoor can become. If you step back and connect all the dots, you can see why some of the smartest investors in the world are buying while others are still doubting. This isn't just a real estate story anymore, it's a fintech, AI, and growth innovation story. The kind that often sneaks up on people because it doesn't fit neatly into one box. So while the stock might have closed slightly lower in the aftermarket, the direction of the company couldn't be clearer. It's moving forward, quickly, confidently, and with an expanding toolkit of technology, partnerships, and leadership strength. That's what builds sustainable value over time. The calm of today might just be the quiet before the next move higher.